Hi traders, I want to show you an example of a head and shoulders pattern that's set up on the 30-minute chart. This is the pound dollar we're currently looking at, and I'm going to show you this larger swing on the daily chart from this high down to this low. If you just draw your Fibonacci tool, show you, we do a quick top down here. See how prices rallied up to the 886. Okay, so as I said, it's not a very well known Fibonacci number, but I mean, look at the reaction that we're getting off there. Okay, there's an area of support resistance here, but it's not the prettiest. If you have a look at this level here on the left, support becoming resistance, big spike through, resistance holds, closes back very briefly as support, big leg down. Okay, so just understand where we're coming off from the daily. If we move over to the 4-hour chart, so this is the rejection from the daily, big move down. Okay, and here again, you want to find your higher time frame key areas of support or resistance. So from the high down to this low, see how price rallies, and we've got the 618 area here and the 70.7 level. You see this block right here, resistance, support. Okay, nice confluence there of the fib as well as that horizontal support resistance. You see the 618 area is also a level that we were eyeing up before, actually, with this swing up. Remember, we had from this low up to this high. On one of the previous examples, we had a head and shoulders pattern that's set up down here, and you see here this 127, 618 price spikes a little bit higher into that block right there, that last bearish candle there, and then we get a nice rejection. Okay, so it's at these areas you want to start looking for a possible pattern. Remember, there's zones. Okay, so between the 618 and the 7.7, we're dealing with not even 20 pips. So if we move over to this, the smaller time frame, just get rid of this, and this pattern set up on a 30-minute chart, you can see, let's just zoom this up here, price rallies, it drops. Okay, that's hitting that 618 area, then it pushes higher into that block, that last little push higher there. Okay, more auto accumulation. Now we start to break. You see how price comes down, see this base here, comes down, comes back, retests resistance. Okay, that's a base trade. We then break down. Okay, we come below these lows. So in terms of looking at a possible trading opportunity here, you can see we have a possible left shoulder. Okay, you see the rally up, left shoulder, head with an extra push into the key area. Then we drop. You see we take these lows out. So in terms of a head and shoulders pattern, you'll be looking around this area here. Okay, have a look at this area as well. Okay, here again, I like to keep it simple and just go for those wick highs. We've got a wick high here as well. You see that? Let's just move this. Got a wick high in there. There's a wick there, and this is where price releases to the downside. Okay, so around this 59, between 66, 68, okay, like a 2-pip area, I want to look for a possible sell. And if we draw our fibs from the very high down to this low, we've got a 79 level lining up at that 59, 66 area as well. Okay, so 2-pip area. So if we look at a possible sell around, let's put a couple pips below 64 area. Okay, put a sell at the 64 area with a stop above the high here. We're looking around 20 pip stop. Okay, so if we just step this forward a little bit, see our price drops, rallies, drops, and now it's starting to rally. So here's resistance. So we want to go to our order platform. What I want to do is I'm just going to shift this out the way. Right click, new pending order. We put a sell limit at 59.64, a couple pips below that area right there. Okay, stop loss I'm going to use 20 pip stop. See above the high here. So place that. In terms of possible take profits, let's just look at the higher time frame areas. We have, okay, big rally up. We've hit that key area of resistance. Price is finding support around here. Remember, we've got this level in here. Resistance, spiked back into that area. Nice release. It's broken through. You see it's come a bit deeper. Now it's, have a look here. You see our price closes above and then comes back. Look at the rejection from here. Okay, support, support. So that area is minimum area in terms of take profits, or at least get to break even at that level. See this block here feeding deeper. So that's an absolute key area. We've definitely taken out some orders below with the spike lower. I definitely want to watch this 59.26 as the first area. And we've got, you see this block here. Okay, comes back, retests. We've got support holding, resistance, and this area here is also pretty good, 59.02. So 59.26, I think we'll look at taking half the position off, and then the rest of the position either here, or I want to watch price at least at this level. Okay. So we move over to the 30-minute chart. Just step this forward. Okay, so there's your spike up into the area. We've got a full. The high on this was 59.64, so it's pretty much here. That's bang on the pip. Okay, and now we want to see if we can get a release. Now, actually, I want to show you what else happened on this. This was a pattern within a pattern, but it was a little bit iffy in terms of the swing. You see this swing down here. Okay, if we just go to a 15-minute chart and we have a look at this swing down, okay, if we draw your fibs from this high down to this low, okay, see our price drops and then rallies, you see, up to the 38 level here. Okay, if we just zoom this up, and this is definitely not picture perfect by any means, but it's still something I pay attention to. You see this swing up, so we drop, hits this area down here, we rally, you see it hits resistance, comes back to a minimum of a 38% retracement. Okay, so what does that set up? It sets up a possible bearish back pattern. So you see the 886 level with the 2.0 Fibonacci extension or projection right up at that key area. Okay, and if we remember, we just drop this down like this, there's the 79 level, so it's actually just spiked just below. And this is why I say I like to put my order a few pips below. Okay, now there's, as I said before, there's plenty of trades you're going to miss. Okay, plenty. You may put an order at 66 instead of 68, for example, and you miss it by 2 pips. Okay, just understand that the flows are going to be around these areas competing for orders. Okay, so once we've filled, let's just step this forward. First level that we want to eye out is this level right here. Okay, you see how we have key area of support here, resistance. Okay, problematic area. Let's just get rid of these fibs. And this one here. So I want to see price getting down to this level at least. Okay, down here with a target possibly around, actually let's go to the hourly chart quickly. You can actually see this area a lot better on the hourly. See here, support, 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 resistance. Swashes around a little bit. Then we have support, resistance, resistance again. Okay, so definitely want to eye out that. We've also got this little uptrend line here. If we can break down, come up below that area, okay, definitely want to be paying close attention. That's if you want to look for those runners. If we go back to the 15, I'm currently 26 here again. I'm not in any rush to get the stop to break even. If we get a swing high up here, meaning price comes up makes that new high, then I'll look to reduce that risk. Okay, what I don't want to happen is price spike up, filling more orders and taking my stop out. See our price bouncing off this area here. So have a look at that hourly chart. It's coming down to this level here. Okay, big spike down, finding support. So have a look at that 4 hour. This was that key area here. Okay, so we've actually broken down, spiked into this area right there. You see that block? I want to see if price can get a swing high and then try and reduce some risk. As I said, I'm just watching this. We know this is a key level of support here. But if we can get a break, you see that break lower like that? We've got a swing high in place. So now what I'll do is I want to get my stop loss down to just above this high here. Okay, 59.70. Let's call it 59.70. Okay, so now we're moving down and we've broken below these lows. We definitely look to try and liquidate some of the position here, coming short of this level. See this trend line? I'm going to watch this closely. See how price comes back, tests resistance. Okay, so at this trend line here, and this key base, you see this little block here, I definitely want to liquidate some of the position. So I'm going to close part of the position. So we'll close half of it, and now what I'm going to do once we hit this key area, I want to move the rest of the position to break even. Okay, so we've taken half off at this key area down here. See this block over here? Okay, so I would expect a reaction. Just have a look at that 4 hour chart, see what we're doing in terms of price action. So we've hit the key area, rejected. This was a sell on that head and shoulders. Starting to break down. I want to see commitment. You see this? See this level, this base on the 4 hour? I want to see this candle close below. Okay, that will be a very, very good sign. So you see how you can flip through the different time frames to get a feel for what price is doing. Okay, so there's a rejection off this area as expected. Okay, now we're getting that release. That's a good sign. In terms of moving your stop down, we've got this little swing high here. Okay, so stop above 59. Let's make it 47. Actually, let's make it 48. 59.48. Lock some profits in. Remember, I want to take the spread into account. Sorry, 59. 48. Okay, we just follow price down. Nice release down here. Have a look at that 4 hour. So real nice commitment below. And let's just have a look here. Zoom this up. So on your 4 hour, let's get rid of this quickly. You want to watch. You see this base here? We had resistance become support. Okay, then this is where price starts to release. Watch your close on here. Okay, big rejection. Once the candle actually closes on the 4 hour, and I'm stepping it forward like this to show you that this base now is a very, very good sign, because if price comes back, you've got barriers here to protect yourself. Okay, so support in here, like it holds a resistance. Also got the fib, the back of the trend line, as well as see this area here. Okay, resistance, support, resistance. You got this area here, as well as this level here, this block, and this area. And price is now moving down. So in terms of taking profits, this area in here looks very, very good indeed. Yeah, see support, resistance, holds. You see this block right here, this candle before price broke away? That's actually where I'd like to liquidate this position. And we stepped it forward quite a few hours on that, but I want to just show you the power of these areas. So this is definitely an area I'd look to take profits. If you also have a look at your fib tool from this low up to this high, you can see we also have, you see this drop down to the 38, we rally, and then we come down to, we actually have a possible bullish bat pattern setting up here. So another indication I don't want to be getting out before possible buyers. Okay, so let me just close that position off there for 113 pips. I'm just going to step this forward and see what price does. I actually don't know what it does after this. So price consolidates, and I'll just step this forward, and you can see buyers coming in around that level with that bat pattern. So that was a head and shoulders pattern that's set up on the 30-minute chart right there. As I said, if you miss these trades, and I guarantee you're going to miss them, that's absolutely fine. There'll be another one setting up, but just use, as I said, use these reference points. Okay, use the fibs, use the highs, look for other possible patterns here. Like obviously we had that not a very clear pattern, but we had that confluence with the 886 and that sort of bat pattern up there. Put all your little tools in together. You can use little trend lines as well. Okay, this one obviously spiked a lot higher. And in terms of the outcome, we made 45 pips on half the position, and then we made 113 on the second half.